Hey traders, Akil Stokes, and thank you once again for joining me for another episode of the Trading Blog, a daily video that I produce, giving you a little bit of insight about the markets and of course, following my journey as a professional trader. In today's video, I want to share a few tests that I think every trader should take, but I want to start off by talking a little bit about yesterday. Yesterday was our big day in the market, right? The interest rate decision. And there are a lot of upset traders out there. We actually had a nice time yesterday. I went live on Twitter. We had about 200 people show up to watch the decision and watch the markets live with me, and it was pretty cool, especially since I predicted exactly what would happen. And I'll tell you what, that prediction wasn't based off of some massive fundamental knowledge. If you ask anyone, they'll tell you, and ask myself, that fundamentals are by far the weakest part of my trading arsenal. The closest I come to having any education on fundamentals was a micro and macroeconomics class in college, one of which I came very close to failing. So that tells you how much I know about that side of things. But what I do know is that I work very, very hard. I read a lot. I have immersed myself in keeping up with the news and learning about what's happening in the market and paying attention to how what's happening drives the market and the reaction to this, the reaction to that. And over the years, I've become a much better and better predictor of how the market will react when fundamental events come out. And a lot of that is, again, it's just due to putting in the hard work. It's not a massive amount of knowledge, book smarts about knowing what's going on. It's paying attention to how price action reacts and being able to make assumptions in the future. And yesterday, we kind of saw this coming. I said in the live broadcast that I bet we're going to see a little bit of a push in the dollar. That little bit of a push is going to cause a lot of the sheep, those are the traders that follow, right? It's going to cause a lot of the sheep to kind of hop on that move late in hopes of making a massive amount of profit by following a news event, right? We're going to see a little bit of a move in that direction, and then smart money is going to come in. They're going to use that liquidity to buy it up, or I guess in this case, sell the dollar. And we're going to see those traders get eaten alive. And lo and behold, that's exactly what happened. And I spent the afternoon yesterday answering emails and answering messages from traders about, hey, Akil, what happened? It doesn't make sense, right? We increased the interest rate. Everything I've read, everything I've learned tells me that, right? The currency with the higher interest rate, right, should be stronger. When interest rates increase, we should see strength in that currency. I can't talk today, but you guys get what I'm saying. And you got to remember that a lot of the moves that happen in the market are priced in beforehand. So, as soon as we kind of caught wind that this interest rate was going to happen, remember, up to about 3 weeks ago, there was a good chance of us not doing anything. And then kind of slowly built in momentum of, hey, they may increase, they're going to increase. By the time we got to the 93 or 98% chance of increase, guess what was already priced into the market? Yeah, the increase. So what the market was looking for wasn't necessarily the actual increase in rate. We knew that was going to happen. It was looking for news on the rate of change for the next increase, right? When is the next increase going to happen? Because remember, we were promised 4 increases in 2017. We were promised 4 increases last year as well. And the market now wants to know, okay, we got one out the way. That was supposed to happen. What's next? And when there was no aggressiveness during the press conference, when there was no aggressive tone or an as aggressive tone as the market wanted, we saw weakness in the dollar. So that's a little bit about yesterday for all you guys that emailed me. And in the future, just don't trade it. Don't try to shortcut the game, right? Sit back, watch it, learn from it. Don't try to put your hard-earned money at risk, because it's not as simple as it seems, and you will get burnt. It's not as simple as just putting one and one together. If the market worked like that, we'd all be a lot wealthier. But now that we got that out the way, today I want to talk about a test that I think every trader should take, and the test is called the DIS assessment. This comes from a conversation that 2 of my clients had on Twitter this morning. I didn't catch the full conversation. I was preparing for my live trading room, but I think one of my clients talked about, hey, if I were to start a prop firm, I would make it mandatory that all of my potential traders, or all the traders that worked on this on my trading floor, would take this DIS assessment. And the DIS assessment is a personality test. You can actually see, I got a stack of them right here, right? It's a personality test. And what it does is essentially breaks your personality into 4 different levels, right? So the 4 levels are as follow. It's dominance is the D, influence is the I, steadiness is the S, and here's the word that I always have trouble with, conscientiousness is the C. And it puts you in really in 2 of those 4 categories. So it's the circle graph, as you can see on your chart, and you'll get a dot that lies somewhere in those categories. So you may be a D, but a D that's closer to I. You may be an S, but an S that's closer to C, right? So we have a combination of these traits, but typically 2 of them are more dominant than the other. And your traits are broken down in different areas. For example, like a D trait, a dominant trait, and may be like, they're very blunt. They see the big picture. They accept all challenges. They kind of want to get straight to the point. They don't really play around too much. Where the I, the influence, will be something like they're always optimistic. They're enthusiastic. They love to work with others. So collaboration. They like attention, right? They don't like to be ignored. They like the kind of the spotlight. And then you have steadiness, where that would be like, the slow and steady person. Don't rush me. I'm going to do it at my own pace. Calm, relaxed. They're very supportive to others. They're kind of like the glue that holds a team together. And then you have the conscientiousness. I hate that word. Conscientiousness, right? Where they're very independent, right? They like doing stuff on their own, not so much working with others. I want to do it myself because I trust myself the most. They're very objective in their reasoning. They're not very easily convinced. They want details, and they don't really like being wrong. And obviously, if you do want to start a prop firm, I think it's good, or any job, right, in general, where you have employees, it's good to know where your employees lie. And there's no negative traits here, guys. It's not like, hey, if you're this trait, you're bad. If you're this trait, you're good. There's no negative trait. It's all about learning about yourself, because each of these traits tells you about who you're dealing with. And as a business owner, as a boss, right, you need to approach different people different ways. It's kind of like, hey, Johnny over here may react very, very well when he gets yelled at. So if Johnny places a bad trade, right, he may react well, where you go over to him and you're like, come on, man, get it together. Like old football sports style. You just yell at him, and they're like, fires him up. Where Julius over here, Johnny and Julius, who knows where those names are coming from, but Julius may need a better approach. Yelling may not do anything to Julius but make him upset. Julius may need you to sit down with him and go over the numbers. Say, hey, this is why that was a bad idea. You see this, you see that. This is why you may want to change it in the future. So as a business owner, as a boss that has employees, it's important that you know how to interact with each of your employees, and just how each person is different, right? You need to have a different approach on how to handle situations. Now you're asking yourself, how does this help with trading, right? Akil, most of us aren't working for prop firms, right? Well, as a trader, guess what? You are a sole proprietor, right? So you are the owner of your own business. You are the owner, you are the boss, and you are the employee. So you need to know how to handle yourself, and being honest with yourself, knowing a lot about your personality, because there is a big difference, guys, between who you think you are and who you actually are, right? Knowing more about your personality allows you to know, hey, what are my weaknesses? What are my strengths? What motivates me? What causes me stress? What causes me problems, right? And that's very important as you go through your journey of trading, because trust me, as you go through that journey of trading, you're gonna encounter a lot of highs and a lot of lows, and unfortunately, you don't have a boss to sit there behind your back and tell you, hey, do this or hey, do that. Well, some of you guys do. I mean, you guys that are clients with us, obviously you can reach out to your trading coach at any time, and we can help you out with different situations. But the majority of you out there are doing this by yourself. So when trouble arises, when you hit a rough spot in your trading, guess what? You have to be able to do your own damage control. And if you don't know about yourself, if you aren't honest about yourself and where that weakness may lie, or what will motivate you to take it to the next level, you're going to have a big problem reaching that next level. So again, I recommend everyone take it. It's the DIS assessment. I can go on forever about this. It breaks down different, many different qualities. This isn't mine, but it'll tell you stuff like, I don't know if you guys can see it over here. but it'll tell you stuff like even within those categories where your strengths are at. Are you self-critical, right? Realistic? Are you discriminating? Are you, not in a bad way, but discriminating? Are you logical? You're controlled? You're suspicious? You're serene? You're loyal? Predictable? Restrained? High standards? Analytical? It's freaky cool. It's going to scare you because this thing knows more about you than you know about you. So I'll put a link for one, if I can find one, I'll put a link for one underneath this video. And do me a favor, take it and let me know what you are. Put it in the comment section below. I am, if I remember correctly, I am a DC, right? So I'm more of a D dominant. So I'm very stubborn, very strong-willed. I like, I like doing it on my own, but I'm also conscientious. Conscientious, there we go. I hate that word, man. I'm also a C, which means that in order for me to make change, in order for me to break out of my stubbornness, I need a lot of detail. So you can't just come to me and say, hey, Akil, this system works, trust me. No. I need to see the hard data. I need to see the math, and I need to do it myself before I truly believe. But then once I do believe, right, I'm locked in. And again, that has helped me become a better trader and a person as well, just knowing the type of, knowing how I operate. So give it a try, fill it out. Don't be scared. Embrace knowing about yourself. It is a positive, trust me. And then underneath this video, shoot me a comment. Say, hey, Akil, I turned up this just as I expected, or this was a surprise. So I appreciate you guys joining me again. This is a little bit different. Also, let me know if you like these different type of trading blogs. I don't always want to make it trading specific. I don't always want to come in and say, hey guys, yesterday we had an awesome hedge on the market. I was short Aussie dollar but long New Zealand dollar. And when the rate decision came out, my Aussie dollar got stopped out for 30 pips, but my New Zealand dollar ran 100 and something pips up. You don't care about that, right? Hopefully you care about this stuff that pushes you along that path of becoming an independent, consistently profitable trader. So I'll see you guys next time. And until then, plan your trade your plan. Have a good one. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.